note with you. IAS 16, property, plant and equipment. Page 24. Here, highlight. Important. Definition of PPE. Page 24. Can you see definition of PPE? This one. PPE is a tangible asset. 2 bullet point. Held by the entity, correct? For what purpose? Production or supply of goods and services, you write there 1. Or it can be for rental, 2. Or can be for administrative purpose, 3. First bullet point can be for this or for this. And second bullet point, expected to be held for more than 1 year. Okay. So this is definition for PPE. We learned definition for asset. What is it again? Just now, repeated. Resources controlled by the entity as a result of past event of which future economic benefit will flow. That is asset. This one is specifically for PPE. 3 things. Example, I have a machine. Is it my asset? Is it my PPE? For what purpose? Is it 1, 2, or 3? Machine. For my factory, so it is for production or supply of goods and services. Okay. If I got a building is also my asset. For what purpose? 1, 2, or 3? Is for 2 and 3. Okay. Example is I got 3 stories. This building 3 stories. First and second floor is for administrative purpose, office. Third floor, no use, so rent it out. Okay, it's for 2 and 3. Okay, and it's expected to be used for more than 1 year. Second bullet point. Production or supply of goods and services, rental, administrative purpose, more than 1 year. Then when can I recognize my asset? Recognition, this one we went through it. 2 bullet point, same thing, recognition is for asset and liability, same. It is probable that future economic benefit will flow to the entity and the value can be measured reliably. Okay? If the asset can generate future economic benefit to you and the value can be measured, you can recognize in your book. Okay? So definition, recognition. Then measurement. My example. Remember just now measurement we got 4 tutorial 1 on application. Cost, current cost, historical cost, present value, and also the NRV, net realizable. That one more on application. So this is the example of application. Measurement, initial measurement means if I meet this test, recognition test, I should recognize in my book. So I will now recognize how much. So this is how I determine how much. First, I buy from UK imported. After conversion, 20,000 ringgit maker. Should I recognize 20,000 as my asset? I buy from UK the asset. Yes, include. Okay. So my measurement include this cost, purchase cost. However, and then because this is a huge amount, they give me a discount. Trade discount 10%, plus or minus. Meaning, in my book, I recognize only 18. So when I depreciate based on 1,008, it is 10 years long. But if they give you other information, then you decide whether should you include in the measurement or not. Example, because it's imported, you have to pay import duty, 10%. Be careful in your exam. If they say 10% on net invoice, means invoice price, which amount? 18 after discount. If they say 10% import duty on your invoice price, and this is my invoice price, means 10% on 20,000. Okay, so you have to check one. So this one, let's say 10% on net invoice price. So, how is it? Plus or minus? Import duty I have to pay include as part of the purchase cost. So 19,008. So no other information. I will depreciate based on 19,800. Can include. What happened? Transportation carriage forward. I buy the asset. They only send all the way to Portland, but my warehouse is in China. So transportation include plus. So 21,000. Okay. Installation I need to install in my warehouse. Include another 1,000. Yes, can include. After I install, I must do some testing, commissioning. Testing will include material costs, labor costs, overhead. Let's say I produce tables and chairs. So I use the machine. Okay, I test the machine. Of course, I need to incur the wood, labor cost, overhead. It costs me about 800. Can I include? Yes. Now, the first few tables I tested, I'm not satisfied. The design not so good, the coloring not so good. So I continue to do the testing, continue to incur, altogether 8. Do I have many tables with me now? Yes. After some testing, I have some tables with me. Do I throw it away or can I sell it cheap to my staff? I can sell it some to my staff, and the proceed that I receive, let's say 300 minus from your cost here. Okay. Maintenance contract. I signed with the UK supplier for 3 years. Each year they will come over and help me to do some maintenance, 3,000 per year. How much? Don't include. Maintenance contract is an expenses. Repair and maintenance. Treat it as expenses. Don't include as your asset cost. So in the exam, put a dash. Marks will be given. Means you're correct lah. Don't include. Understand? Because of the machine, you have to train your staff. You pay to train your staff, 3,000. Don't include. Training of staff to operate, don't include as your asset cost. Okay, so how much? 21, 22, 5. This is my plant and machinery. This is my cost. I will depreciate based on 22, 5. Got it? So if you refer to the standard, measurement should include purchase price. This one, purchase price less any discount plus any directly attributable costs. These are known as directly attributable costs. Okay, directly attributable cost of bringing the assets to its present location, the office, the warehouse, for its intended use. These are the costs incurred, okay, to bring the assets to its present location for its intended use. So yes, you can include. Can I deduct settlement discount? Settlement discount is when you pay early, you got discount. You don't pay, you don't get the discount. That one is on settlement. Nothing to do with the purchase. Therefore, settlement discount don't minus. Can I? So this is measurement. So that's why I say it's more on application. You have to decide whether you include or not. So first year will be 22.5 you record. End of the year must you depreciate? Yes, you depreciate based on 22.5. Every year you depreciate, let's say over 10 years. So this is today I recognize 22. End of the year, subsequent measurement means following year. What I do? You continue to depreciate. Correct? The one that you learn is known as cost model. Last time when you learn, you buy asset, you depreciate, let's say 10,000, you depreciate 1,000, 1,000, 1,000, right? That one is cost model. Cost model. Okay? Some asset, after some years, I will revalue the asset, especially land and building. So that one is called in the future, I will call it the revaluation model. So the one you have been learning is cost model, whereby you take the cost less accumulated net book value. But soon you're going to learn one more, cost less accumulated impairment. If it's revaluation model, you revalue asset, depreciate based on the revalue asset, minus accumulated depreciation, same thing, minus accumulated impairment. Okay? So, two model, cost model, revaluation model. Page 27. Okay. Next example. Okay, self-constructed asset. Means you don't buy the asset, but you build your own asset. Okay. Normally, computer I will buy. Car I will buy. I won't construct my own car. Computer no. But building, if I got a piece of land, can I construct my own building? My own office? Very normal. Okay. I got a piece of land. I can construct my own building. I can buy building. Okay. So purchase building very easy, straightforward. But what if I construct my own building? I have a piece of land. I decide to build my own office. It will take 1 year, 2 years, 3 years, 2 years plus. Is it okay? 2 years to build, 2 years plus to build. In the first year, when I construct my building, I have to incur material costs. Okay, material costs, labor costs, and overheads. Total 300. Material, labor, overhead to construct the building first year. So what do? I'll credit my bank. This is bank account. Credit my bank, pay, debit, building, include material, labor, overheads. Have I completed? No. So carry down, brought down. Okay? Do I depreciate on this WIP? No need to depreciate. Haven't used yet. Haven't general income. So you haven't general income, zero. You don't match it with the depreciation expenses. Cannot. Okay? So no matching. Therefore, no need to depreciate. Continue to incur material, labor overhead. So you credit your bank, you debit your building. Again, not yet completed. So carry down, brought down. Okay. Then until September, end of September, you incur another 200. But you have to pay extra OT 50. Should be 200. But 50 is due to OT inefficiency. You pay 50 OT. Can you include all 250 as your asset cost? No. Understand? You only capitalize those as per budget, 200 related to the asset. If it's due to inefficiency, that's why you have to pay OT. This 50 you don't charge to your cost, you have to go to your expenses. Any inefficiency or not related cost, example, nothing related to building, you must charge the expenses. Okay? You don't go and increase your cost asset. And now it is completed. It is now completed in October. And you can now use the building. You start to generate income from October. Do you depreciate your asset? Yes. For how long? End of the year, you depreciate 3 months. Understand? Because it's October, November, December. So let's say it is 10%. You take 100, divide by 12 times 3, that's your depreciation charge for the year. Okay? So your asset cost, you capitalize 1,000. Measurement. self-constructed asset. Capitalized when it's related to asset. Do not depreciate until it is completed. Okay. So later we have one question on this. Next one. Okay. Your PPE, your computer shop, a computer shop purchase computer, non-current asset or current asset. I buy computer. Yeah. Current asset. Okay, correct. So it depends on the purpose. If it's for own use, then it will be treated as PPE, non-current asset. If you are, because you're a computer shop, you buy for resale purpose, for resale for profit, means it's part of your inventory. Understand? So it must be, you must know, you must determine for what purpose. Okay? So if Star College purchase computer, non-current or current, confirm non-current. Star College cannot be buying to sell because it's not their business. Cannot. If Star College purchase office building, furniture, non-current. Okay. IKEA purchase furniture, depends. Can IKEA buy furniture for their office? Yes. So non-current. But furniture buy to sell, current. Okay. So a computer buy computer, computer shop buy computer, then it's next. Okay. Because if you treat it as own use, then you must depreciate. If you treat it as for inventory, when you sell, you must recognize it as income. If you buy for own use, you sell, it will be gain or loss on disposal. This will have tax implications. You learned before tax? You treat it as PPE, when you sell, you have a what? Balancing charge, balancing allowance. Okay, not taxable, right? Not taxable? Yeah, it's taxable. Okay. If this one is your business income. That's why you have to be careful because tax implication is there. Yeah. Depreciate. This one no need to depreciate. Next. Oh, this one no. So, which are tutorial 2, question 1? Okay. Consider the following situation. In each case, do you have an asset or do you have a liability, income, and expenses? Within the definition given by the framework. And we have learned before definition of asset, resources control, past event, and future economic benefit. Liability, present obligation as a result of past event, from which outflow is expected, correct? To flow. So this we know the definition. Now you decide A. Screwdriver you buy during the year. Should you treat it as asset, liability, income, or expenses? Asset. Why? Definition for PPE. Is it because of 1, 2, or 3? Production or supply and goods and services? Is it for rental or is it for administrative? Screwdriver. Production and supply and goods and services. Is it expected to be used for more than 1 year? Yes. So it satisfies the definition of PPE. Okay. Then normally how much does it cost you? Screwdriver? 20 ringgit. So satisfy the definition of PPE. It is, let's say, 20 ringgit. So if you classify as an asset 20, can use for 10 years. It means you're going to depreciate $2, $2, $2 over the year. Is it material? It is not material. Therefore, this 20 ringgit asset, even though satisfy non-current, you can treat it as expenses. Expense off straight to the P&L. You don't waste time and go and classify asset, then depreciate $2, $2. No, it's not going to affect your profit. Okay, so you must explain this way. It is a non-current asset, should be treated as such. However, due to its low value, therefore, it is therefore can be treated as expenses. Got it? Must mention both. In practice, company normally will set, example, time college, anything below 500 expenses. Other company can set it as 1,000. Another company can set it as 2,000. Up to you. All right. Next, hired machine, lease machine means rental. You rent a machine. Is it asset, liability, or expenses? Renting should be expenses. Unless you meet this standard, then it will be treated as asset. Repeat, this one shouldn't be here, but since it's here, rental normally is an expenses. However, if this is hiring a machine that meets the definition of this standard, IFRS, you won't learn here. At this level, you learn in your degree. Okay, right? So it's a new standard this year. So you meet this standard, then you will treat it as just put right down there, then no need to memorize. That's not relevant. But since it's here, I just put it here. A good reputation of business with its customer. You have a very good reputation, good location, good what correct, good services, customer base. You got huge customer base. Huge customer base. All this will result in good reputation, goodwill. Understand? All these considered companies goodwill. Good location, good reputation, good service, huge customer base. All this will translate into companies goodwill. Understand? Now, goodwill can be purchased goodwill, can be internally generated goodwill. Goodwill can be purchased goodwill, it can be internally generated goodwill. Okay? So, purchased goodwill, yes, we can recognize. Asset, intangible asset. Internally generated goodwill, we cannot recognize as our intangible asset. So what is this? Okay, you learned before goodwill last semester on your partnership, right? When partner leave, when partner comes in, then we create the goodwill, correct? That one is for partnership. This one is for company. So company, let's say I got A and B. Both has got a piece of land, 100,000, 100,000. A has got good reputation, the business, asset is 100. They got good reputation, they got a very strong customer base, they got service are very well known. Okay, so if I were to buy over your company, A and B, which one do you think I have to pay more? Both having asset of 100,000, but you got strong customer base, you got good reputation, good services. Do you think I have to pay more for this company? If I want to take over, yes, I have to pay more due to the goodwill. So purchase goodwill. If I take over your company because of your reputation on this, I have to pay more. The goodwill can be recognized. Okay. Internally generated goodwill means I create myself a goodwill. Cannot. Like Star College, you mentioned accounting costs. You know that Star College is good. Okay. You mentioned what's that? Other courses lah. Maybe Star College not a good example. Yeah. Okay. So in terms of accounting costs, Star College we have a goodwill. Cannot we have goodwill. So can the director of Faf recognize our goodwill since we got name? I think it's worth 1 million. Can I recognize it as my asset? Intangible asset 1 million. Internally generated cannot recognize. Is it okay? If I say 1 million, another director says no lah, it's worth 3 million. Another director says no lah, it's worth 5 million. So how much is it? Cannot be measured. What's the definition when it comes to recognition test? Must be able to be measured reliably. If I generate myself 1 million, another one 3 million, 5 million, cannot be reliable. So don't recognize. Okay? So internally generated goodwill cannot be measured reliably, don't recognize. Okay? So one screwdriver mentioned asset but expense of. This one is expenses unless you meet the criteria, then asset. This one is goodwill, purchase yes, internally no. I'll show you the answer first. Tutorial 2. So you see how it's explained here. Screwdriver is a non-current asset, we know. Okay, it will be used for 1 year for production and supply and goods and services. However, because it's very time consuming to actually recognize and then depreciate the small amount, so therefore it can be charged to income and income statement, means your SPR, due to its low value. Okay, you must mention that way. Asset, expenses. Machinery, it is an expenses unless you meet some of the criteria, it will be treated as asset. Expenses, unless it's finance lease. Essentially, we can more or less ignore this thing. Cannot, because finance lease even is already replaced this standard. Okay, number 3. Good reputation is a goodwill, is an asset, intangible asset, cannot see one, cannot touch. So this is an example of intangible, okay, which do not have physical substance, cannot touch, cannot see. For limited company, not partnership, for company, internally generated goodwill should not be recognized. Internally generated, no. Only purchase goodwill can be recognized. When you take over another company, you can recognize. We will learn this in our last one or last 2 chapters. When you are to take over another company, you see a lot of goodwill. Okay, purchase goodwill. Number 4, D. Pelangi has purchased patent. You know what's a patent? Patent, you register patent. Example, I have invented an engine. This engine no need to use petrol, use water. Good invention? Yes, good invention. So I scared people will copy. So what do? I quickly patent it. Patent it means register it as my asset. So this patent, this technology belongs to me. It's an intangible asset. Okay. Can I sell this technology to Toyota? I can always sell. It's my asset. I can always sell. If they buy from me, this patent will be theirs. It's their asset. So now I'm buying patent from another person. My company is buying patent from another person for 90. So I'm buying intangible asset. Can I recognize? Yes. The patent will give the company sole use of the particular manufacturing process. So the patent is about a manufacturing process. I can have a sole use. Do I have control? Resources controlled by me? Yes. Which will save me 21,000. Saving to me in the future. Is this future economic benefit? Yes. So have control over this patent. It will generate future economic benefit by saving on cost. Good. I can therefore recognize 90,000 as my intangible asset. Okay? E. Bernas paid Motor 60,000 to set up car repair. on condition that priority treatment is given to car from the company split. Meaning, I pay your company 60,000. You go and set up your own shop. But next time I bring my car over, you must repair my car first. Okay? So how should I treat the 60,000 that I give it to you? Can I recognize as my asset? Do I have control over the workshop? Control. You are the boss. Okay? I send over, I give you 60, I send over, you must repair my car first. But next time you want to change, you want to treat my car first, is it okay? I mean, not is it okay? Can I do anything? No, I have no control over your workshop, it's your workshop. Okay, so this 60,000 cannot be treated as asset. Okay? So, no, it should not be treated as an asset. Patent, yes. This one, no. No control over your workshop. Okay, in the future, you may not want to give me priority. I have no control, may not have future economic benefit. May not. It is not probable. Okay, so no asset. Last one. Deals from persona provide a warranty with every car sold. I sell one car, I give you 1 year warranty. Asset or liability? I sell a car to you and I give you 1 year warranty. Anything wrong with the car, you can come back to me, I will have to repair within 1 year. So I give a warranty. Today I sell, I give you warranty. Asset or liability? Warranty is my liability. Okay? What is the definition for liability? Present obligation. Do I have responsibility to repair the car within that year? Yes, I have obligation. Okay, due to the warranty. The warranty to repair. As a result of past event, I sell the car, I give the warranty both. And what else? Outflow, would it result in an outflow? Yeah, if they come back to me, I have to repair, it will result in an outflow. So this is a liability. So I should recognize because of this. Got it? Answer? You have taken already. Let's go through. The patent is an intangible asset. There's a past event in which I buy it last year, last month, or whatever. I bought it for 90,000. Of course, I have the sole control over the manufacturing process, and it will generate future economic benefit, recognized as asset. The 60,000 for the workshop cannot be classified as asset. No control. Okay, no? I have no control whether they must treat my car first, repair my car first as priority. I have no control whatsoever. So it can be it is difficult to argue that there will be future economic benefit. Not probable. If it's not probable, don't recognize. Is it okay? Last one. I have obligation. Is this legal obligation or is this constructive? The what? The warranty? Warranty, is it legal obligation or is it a constructive? I give warranty 1 year. I sign the contract. Now, I sell you the car. I give you 1 year warranty. Everything will be in contract. Okay, not? It's legal obligation. Constructive obligation has to be due to my past practice. Right? Public announcement can be due to my published policy. This one no. This one is legal. Okay. Done. So far so good. So therefore you must practice to write. Okay. What are the points to write? Go back. Fine. Number 2. Okay. Last week, I give you one example on substance over form, which is on your redeemable preference share, right? Question 2 is an example of substance over form. Okay, the substance of the transaction, the commercial substance, rather than the legal form. We look at the substance rather than the legal form. Okay, the legality. So before we continue, I have a receivable example that owe me say 3 million. Customer owe me 3 million. If the customer run away, who bear the risk? Me. Okay, not? If they pay me 3 million, I have no more risk collected. 3 million not collected, I have a risk whereby if they run away, I will lose 3 million. Okay, so there is a risk on my side if they run away. Okay, so at the end of the year, Sunrise trade receivable has a balance of 12 net after deduct 3. So our focus is on the 3. I have deducted 3. That was sold for 2.8. I have a 3 million receivables, which I actually sold it, means I traded off for 2.8 to Speed Cash Financial Service on this date. Have you heard of factoring before? So I'm factoring my 3 million receivable to a factor. How much I collect from them? 2.8. So it is something like this. We are Sunrise. This is Speed Cash Financial Service. Speed Cash Financial Service. Who is the factor, right? I have a 3 million trade receivable, which is considered, we call it sold off. We call it factor. Okay, I factor the 3 million to this factor, factoring company. Who is now in charge of collection? So customer who owe me 3 million will be the collection duty is transferred to factor. Okay, not the 3 million. So now, in return, the factoring company will then advance to me 2.85 million. Is it okay? Continue. The difference of 1.5 million, 1.1500 is actually treated as finance cost expenses. I trade off to you 3, I collect lesser. The difference I treat it as finance cost. Okay? Sunrise has to refund. Can you underline this keyword? Sunrise must refund to SCFS FS any amount relating to the trade receivables that remain uncollected after the period of 3 months. Okay, so you see what happened in my trade receivable account. Summarize. Original, forget about the 12 million, we focus on the 3. Original, I got 3 million. Is it my risk? It is my risk. If they run away, I have to forgo. This is the factor. What happened is they pay me, I'll collect how much? 2.85. Understand? 2.5. And what have I done? You see, I go and credit my trade receivable. Okay. What happened to the balance? It's considered settled. I treat it as my finance cost interest 0.15. This is what I have done. Can you see my receivables now 0? Am I treating now that I have collected the 3 million? Yes, I have collected 3 million, meaning my receivables now become 0. So am I saying that my risk now becomes 0, no more risk? This, as per this example here, no more risk. Right now, 0 balance. But You see carefully here. Sunrise will have to refund to Sunrise will have to refund to Heat if this company here is unable to collect from the customer. So you see here, I factor advance 2.85 million money out. How they get back the money? Hopefully, customer when they collect, they get back the 3 million. They will keep the 3 million, and they already advanced 2.85, right? They keep the 3 million, they make 150,000 profit. Okay, but what happens if it is unable to collect? 3 million unable, so still got 2 million already out, but 3 million unable to collect. What can we do? Sunrise have to refund, meaning you have to refund the 3 million to him. Okay, no? So has the risk been transferred? Before I have 3 million, my risk is 3 million. After the arrangement, is the risk still remain with me? The risk of 3 million? Check. The answer, the risk still remain with me. Because if the factor unable to collect, who has to pay? Sunrise still has to pay the 3 million. Meaning when I record as 0, but actually the risk is still there. Okay, so the substance of this transaction is the risk has not been transferred. Even though the money collected, but the risk hasn't been transferred. So I should therefore maintain my receivables as 3 million. Don't recognize receipt. Okay? Then in that case, if I collect the money, if it's not credit receivable, then what should I do? In substance, it's actually factoring lend us money, loan, 3 million, but they only advance 2.85 because we treat it as our finance. And then this trade receivable the trade receivable is used as security. Understand? I need money. I borrow money from you. If I got a piece of land, now this is my land, please lend me money. Land is my security. Right? But now I use my trade receivables as my security. Please lend me 2.8. This is my receivables. You collect. If you can't collect, then you come to me. Cannot? So the risk still remains with me. So the substance of the transaction is a loan by SCSF, and the trade receivables is used as security. Means my receivable is still remain at 3 million. So what is my correction? Debit back my receivable because the risk is still there. Credit loan. I have a liability here. Must be paid back. My transaction with it, I treat as though I have collected the money, 3 million, but actually haven't. The risk is still there. So create that the receivables. Then what happens to the money received is actually a loan from SCFS. Okay, it's a loan from them in which I use my receivables as a security. Okay, so this example is not easy. Okay, but introduced to you. So far you have now got 2 examples on substance and form. Right? So your correction of an advice Sunrise on the proper accounting, apply substance over form. Our correcting entry should be debit receivables, credit loan. Okay? Answer? Question 2. Okay. Number 3. Okay. Number 3, A. Define the term PPE Wyman. Where's Wyman? Wyman. Define the term. Definition. How many bullet points? 2. 2 bullet points. First bullet point got 3 things. What's the definition of PPE? First bullet point. Help by the entity for what? Help by the entity for production or supply of goods and services. For or administrative purpose. And second bullet point, expected to be used for more than 1 year. This is the definition of PPE. Is it okay? Number 2, Jahui. Where? Huh? Got 2 Jahui. How? Yeah, how Jahui? What is the criteria for recognition? Just now is definition, now recognition. How many bullet points? Recognition. 2. What are the 2? Recognition, when can I recognize? When what? Probable that future economic benefit will flow to the entity. Second bullet point. Yeah, the value of the asset can be measured reliably. So recognition done. C. Briefly explain accounting treatment for the following item. Yvonne. Where? Yeah, Yvonne. Tools and hammer. How should you treat this as an asset, liability, income, or expenses? Asset. Why? For what purpose? 1, 2, or 3? Is a tangible asset. For what purpose? Help for? Which one? 1, 2, or 3? Production or supply, rental, or is it for administrative? Yeah, it's for production and supply of goods and services. Okay, is it expected to be used for more than 1 year? Yes. So yeah, it is an asset. But we know that tools and hammers, this one cost about $50, $20 only. So what do you do? Because due to its low value, so and it's too time consuming to recognize asset and depreciate accordingly. So therefore, it is to be expensed off to the P&L. Okay? So recognize asset, however low value P&L. Painting. Painting, would it generate future economic benefit? No, it's for hanging, no benefit whatsoever, and therefore we don't treat it as our asset. Okay? Painting. Wilson. Number 3. Computer purchased by computer shop. How do you answer this? 3 marks? 4 marks? Okay. Computer shop purchased by computer treatment depends on what? If the purchase of the asset computer is for own use, then it will be treated as non-current asset. It's expected to be held for more than 1 year. For what purpose? More than 1 year? For what purpose? No, purpose is for administrative purpose. Not for production, not for rental, but for administrative purpose. Alright? What's the other one? If it's for resale purpose to make a profit, then it will be treated as your inventory, current asset. Okay? So you must explain this way. Lastly, equipment. Equipment we know is an asset. So resources control, funds event, then future economic benefit for what purpose? Production and supply and goods and services expected to be used for more than 1 year. Done. Answer number 3, take down. A. So just now A already answered This is first bullet point. One, for rental. Two, administrative and maintenance purpose. Three, more than one reporting. Recognition, two bullet point. It is probable that future can benefit and the cost can be measured reliably. C, hammers 2 should be treated as PPE. However, due to its value which is insignificant, we will therefore treat it as expenses. Continue. Wait, Painting is not for administrative purpose, not for rental, not for production. So you don't recognize it as your PPE. Computer must mention both. It is for own use, then asset, non-current. It is for resale purpose. Down here. There are two possibilities. If it's for administrative purpose, then it may satisfy the definition of PPE, therefore recognized as PPE. However, if it's for resale for profit, then we treat it as inventory. Okay. Equipment we know is definitely an asset, non-current. Done. Is it okay? Now we look at D. Okay, this one, determine the cost of machine needs measurement. On this date, Mr. Gunn from Paradise placed an order for 12 units of machine from a dealer. Machinery was delivered on this date at a purchase price of 1050 each. Can you see the word each? A trade discount was given, 10%. Import duty and taxes amounting to 5% of net invoice. Net invoice means before or after discount? After. So, before we continue, what is my purchase cost? How should you show it in your working exam? What is my purchase cost at the moment now? With the information, you take 1050 times sharp. I can tell you in exam, 20 to 30% of you will forget to times sharp. Okay, it's that simple and it's a very careless mistake. Because they say here each. Then 10% trade discount, plus or minus? Minus. After you minus, you got a net, you plus your import duty. Do you include delivery? Yes. Do you include installation? Administrative costs incurred related to the acquisition? Yes. Other general overhead. Meaning, I buy this asset, I incur electricity bill for my office. Overhead. Can I charge the electricity bill to my asset? No, cannot. Dismantling and restoring the building site, I have to dismantle. Means if I install something, I must dismantle up. Yes. So these are called directly attributable costs incurred to bring the asset to its present location and for its intended use. Directly attributable costs. Remember this one? Good. Good, Directly attributable costs to bring the assets to its present location for its intended use. Answer. You see, your lecturer, normally when allocate marks, this is how he allocate the marks. 12 times 1050, half a mark, 1 mark. Can you see? One tick is half a mark for me. 1260, yes, working 1 mark. So you see how much marks you will lose if you don't show the working? Yes, must show the working. You see now, if you make the 20% mistake, which is this one, 1050, you did times 12. So this one no mark, correct? But 10% means your answer of discount will be 10% of 1050, correct? Of course, you follow through. 10% of 1050, 105. Would you get marks for this? Yes. Why? Because I know how you get the 10%, 105 with the working. Imagine no working. I really don't know how you get the 105. Okay, with the 105, you show the 10% on this. Yes, I give you marks on the working exam. So it's that important. Then you minus 5% of the net. But if you have 5% on your net here, how much is the net? 945. If you show 5% of 945, you should get marks. Got it? And marks will be given. And then we know that other general overhead, my office electricity incurred should not be included as my asset cost. So put it there, put the dash. May get marks. If Mr. Su allocate marks for this, you will get marks for this. If you totally ignore, no marks. Okay, so this is on the technique on how to graph. But I can tell you, working definitely a lot of marks. All right. Number what now? Number 4. Determine the initial historical cost, means the initial measurement for the above machine. Multimedia placed an order for 4 units from UK. The machinery was 25. Delivered on this date for 750 each. So times 4. Okay. A rebate means a discount of 3% was given as a promotion during the month. So you minus 3% on the total value. Is okay? Import duty and taxes is 5% of invoice price. Can you see the word net there? No. So this is your original price. It's different from question 3. Net invoice price. This is 5% on invoice price. Original invoice price. The following costs were incurred. Delivery include installation. Yes. General overhead. No. Put there and put a dash. Cost to relocate. No. I relocate my business from Shah Alam. I relocate the whole office operation to Klang. Can I include this cost of relocation into my asset cost? Nothing to do with my asset. It's a relocation cost, it's my expenses. Relocating my operation site don't include as part of my cost of my asset. Okay? Expenses. Okay? So, answer? $750 times 4, working, yes. 3% of 3 million, yes, minus. And import duty will be 5% on invoice price, which is this one. Not on the net. Not on the net. Plus. Now, I put 2 dash here. General admin relocation cost, put a dash in case marks is allocated. Okay. Number 5. Bangsawan is a mini conglomerate with many divisions. During the year, the management commissions its engineering. During the year, the management commission asks its engineering and construction division to build a plant for who? Manufacturing division. Ask the engineering construction division to help build a plant for another division. Okay. Another division means not another company. It's still one company, Bangsawan Sdn Bhd. Okay. Two different divisions, still under one company. The cost incurred to build the plant will be contractor's cost. Can I include into the plant cost? Yes. Can I include direct material labor to construct? Yes. Can I include the engineering cost? Yes, to build the plant. Can I include the interest? Yes. Can I include the general overhead? I mean, no. So include. This one don't include. Continue. The direct material and labor use, we are talking about this one. The direct material and labor used in the construction include 6 million, which was attributable to inefficiency caused by labor strike. The 34 million here include an inefficiency cost of 6 million. Can the 6 million include in my plant? Any inefficiency cost, just already mentioned, should be charged to P&L expenses. Don't include as your plant cost. Meaning, this one you must minus 6,000 out from the plant. Is due to inefficiency. Got it? Do you include the 12,000? No. Don't include the 6. Don't include the 12. Okay, as part of the cost. Continue next page. Okay. The transfer price between two divisions was 120. You know what's this? Transfer price. The company has got this. Wait, continue. The manufacturing division recorded the plant at the transfer price, meaning 120. The similar plant could have been purchased outside for 112. So this one not relevant. 120 is relevant. Yeah. Bangsawan has got engineering division. Is being commissioned to build plant for manufacturing division, both under my division. Okay, so you build, we have determined what to include, what not to include. Okay, so you include, and then transfer 120 at 120 price. He will record 120. Okay, so now this is another concept, similar one. If your father buy 100 ringgit from outside, sell to your mom 120. You as a family, son and daughter, are you happy with this arrangement? Do you make any money from here as a family? Father buy 100, sell to the mother 120. Cannot. So it's same family, right? So father make 20, the mother pay extra 20. You as a daughter and son, are you happy? Do you make any money as a family? You don't see any money, correct? What happened if I tell you here, the buy 100, sell to the mom 120. The mom sold everything for 130. Family member happy? Happy, yes. How much does the family make? Family 30. Mother make how much? 10. The father make 20. Why? Because the mother already sold. So once sold, family will make 30. If it's not sold, don't make anything. Meaning the $20 should not be recognized because the family have a make. Okay. Buy 100, sell to the mom 120. Mom sold half of this 120. Half of this 120, the 60. sell it for sold half. Family happy or not? Sold half the goods for profit. Has the father realized the profit? Half the profit. If the mother haven't sold, the 20 ringgit haven't made the father family. If the mother sold everything, the 20 ringgit is made. If the mother sold half, means the family make half the $20. Understand? So if it sold everything, $20 all made. Not sold, $20 not made. If it sold half, 10 made, 10 not made. So we don't recognize the 10 which is not made. Understand? So same thing, bangsawan, engineering and also manufacturing. If they have to build, let's say 100,000, transfer 120 over. Here, father make 20, the mother have to pay 120. As a bangsawan family, do I make the 20? No. So don't recognize the 20 in my book. Okay, take it out. Any profit between company division, don't record. Take it out. So here, bangsawan commission engineering and construction division to help to build a plant for manufacturing division. So you will look at the question, contractor 42, check your question, is it there? Direct material and direct labor 34, is it there? Engineering technical overhead there, indirect interest and general admin 12. So the cost, everything is transferred here. What is the total? 106. And transfer how much to manufacturing division? 12. In other words, engineering make how much? 14. Okay, not? Transfer to manufacturing, which record in their book as 120. Is the 120 here include all this? Yes. But can the company include profit inside? No. So what must you do to adjust this 120? Minus out the profit. You should not record 120. You should minus out 14. Okay. Internal transfer profit should not be recognized. So minus out 14. 120 include all this. So minus out 14 here. Must you also minus out 12? Yeah, the 12 is already included here. So minus out 12. Must you also minus out here the inefficiency? Yes. So don't include this, this, and this. So take it out, take it out, take it out. You only recognize 88. Okay? Answer? Anyone not clear? Okay. Can I? The component that can be capitalized will be only 88. You see, if you refer there, they already minus out the 6,000 and they did include the 12,000. So 88. Transfer at 120. So we have to adjust out, adjust out, adjust out. Okay? Capitalize, 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 capitalize. Don't capitalize the general. So it is transfer 1 2, therefore minus, 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 done. Question 5, settle. Question 6. We goes to part B first. Avanza. Avanza has recently purchased a plot of land. It has constructed factory building on the land. So construct building is two different things. So when you purchase property means land and building. Property means land and building. So when you purchase 100 million from Mr. A, the 100 million you must split between how much is land, how much is building. Must. Repeat. When you buy 100 million property, land and building, you must determine how much is land, how much is building. If your land is 20, your building will be 80. If your land is 30, your building is 70. Cannot. Why do we have to split this way? Because we don't depreciate land. We depreciate building. So when you buy 100, we only depreciate 70 on the building. 30, we don't depreciate land. Okay, so it's important to depreciate land and building. So now that I buy land and I construct a building on it, I have to split which one related to land, which one related to building. Okay, so I buy land, it costs me 1.5. Is it land or building? Land. Legal and stamp duty, land. Demolishing and clearing the land, land. I cost of performing the soil test piling work, piling. I check the soil, is it stable, and then I do the piling, the structure, piling. Piling is for purpose, building. So this one is for building. For the building, I need to get engage an architect. Building, legal fee, they tell us is building. Construction, material cost, labor cost, overhead, building, and interest on the taken to for the loan or the building. Building. So you have three land, 5 building. Split them and total together. Is it okay? 3 land, 5 building. A. What is the 3 characteristic of non-current? When you see a non-current, what is the characteristic here? With reference to IS 16. This is not definition, not recognition, but characteristic. So answer here. Three characteristic of PPE is for business, more than 1 year long useful life, and it has got physical existence. You can see, you can touch. Intangible, cannot see, cannot touch. So these are characteristics, and then this one we discussed already. 3 land, 5 building. So when you depreciate, let's say 50 years. 50 years will be based on building. This one no need to depreciate. Okay. And C, you have to list, you have to briefly explain 2 things. You have to list up and then briefly explain on what you have listed. So list and explain. Factor that will limit the useful life of the asset. What actually reduces the useful life? Why useful life of asset reduce? Why? Yeah. Because of physical wear and tear, you have list. Explain what is wear and tear. Deterioration in useful life due to asset being used for a long period of time. Okay. Car, we normally take it as 5 years. If this car always travel, this one has less travel. So do you think this one has got lesser useful life? Yes, because it travel too much due to the physical wear and tear. Wear and tear. Okay, if you exercise too long, if you exercise too long for 2 hours, 3 hours, your body will also very tired, right? Your body will wear and tear. Okay, that's what it means by that. Okay, That's why useful line we use. Secondly, when technology advances, when the new technology comes in, introduce your old technology becomes what? Obsolete. Okay, becomes obsolete. Number three, economic factor, drop in demand, drop in market value. So if you buy this asset, this plant and machinery can use for 10 years. But economic downturn, no demand. Your plant cannot be used for that long anymore. So due to economic downturn. And lastly, due to legal factor. If you drive a taxi, you thought you can use it for 10 years. Government suddenly make an announcement. Taxi to be run on the road, you cannot be more than 5 years old. So 10 years, 9 years, 8 years. Suddenly government say cannot be more than 5 years old. So I left it 1 year, from 8 years becomes 3 years. So due to legal factor, useful line to use. Okay. Number 7. Briefly explain 5 examples of directly attributable costs. Quy yok, quy yok, yeah, directly attributable costs. What are they? Transportation, import duties, some more. Testing, installation, professional fees, yeah, all this, yeah. So these are directly attributed costs of bringing the asset to its working condition for its intended use. Got it? B. Explain 2 models of IS-16 for subsequent measurement. We know initial measurement, we recognize. Subsequently, how many models? 2. What are the 2 models? Cost model, how to value, how to calculate. Cost less, accumulated depreciation less, accumulated impairment. What's the other model? Revaluation will be the revalue amount, fair value less accumulated. Okay. Answer for number 7. Directly attributable costs are all these examples. Cost model in wording is your cost less accumulated depreciation, less any accumulated impairment. Cost less accumulated. Revalue amount will be the revalue or the fair value, less. Number 8. Distinguish between cost model revaluation. Say. Okay, say. Differentiate between asset purchase you buy compared to self-constructed. Have we discussed this one? Yeah, what is a self-constructed? You build your own building, incurred more than 1 year. What are the costs should be included? Material costs, labor costs, overhead. Do you include inefficiency costs for self-constructed? No. So answer for number 8. Cost model, revaluation model, say. Repeated one. Meaning next week when you do your tutorial 2, you can ignore question 8. Same as the earlier one. Same as question 7. Asset purchase, self-constructed. We construct and develop instead of buying. The cost will be material costs, labor costs, and overhead. We can also include borrowing costs that are directly attributable. You borrow to construct this building? Yes. Is it okay? Example, you borrow 10 million. This 10 million is for this asset, self-constructed asset. The 10% you can include. If you borrow 5 million for other purpose, Can you include this interest in the asset here? No. It must be directly attributable. This one is for self-constructed. Yes, this one, no. The interest can include, the interest cannot include. Got it? And number 9, same. No need to do. Reason for the useful life to be limited, 1, 2, 3, 4, same. So basically you only have 7 questions. 7.5 lah, because of this one. Self-constructed building. Okay?